and welcome to At the Forefront Fintech Conversations. I'm Sam Belden, VP and Head of Content at Forefront, and with me today is Tony Acuña-Rohter, CEO at EDX Markets, which is a digital asset trading venue for institutions. Tony, welcome to At the Forefront.
Thanks for having me.
Absolutely. So Tony is the CEO, obviously, at EDX Markets. He's been in that seat for a few months now. And today we're going to talk about some of his priorities for 2025, the value that EDX Markets delivers to its members, and some of the excitement and momentum that we're seeing around digital assets, particularly in the US right now. So we'll get to all that, but Tony, first of all, mentioned that you've been CEO for a couple of months at this point. Congratulations, first off, and tell us a bit about how that transition has been so far.
Yeah, so it's been great and very exciting. So we've been building EDX over the course of 2 years. We've been getting the technology in place, the people hired, all the processes ironed out. And so the timing has actually been perfect because we have everything built and ready to rock and roll now that these crypto tailwinds are behind us. So what that means is we're really keen on delivering our mission and really providing workflows and standards that traditional finance has enjoyed for decades upon decades and bringing those to the world of crypto.
Fantastic. You touched on it a little bit, but obviously, these are institutions that want to feel very confident about moving into what's very often an unfamiliar asset class. And so what do you see as the most important factors in your ability to deliver an institutional grade trading experience for digital assets?
Yeah, so that's something that we think very deeply about here at EDX. And there's 3 main components that we're looking to deliver here. So number one is, in terms of our business model, is an unconflicted business model. So what that means is we're purely focused on being an exchange and a clearinghouse. We're not looking to be a broker and onboard direct retail. We're not looking to be a market maker. We're just purely an exchange and clearinghouse. The second piece is that we understand that for a trading venue to work, you have to be highly capitally efficient. And the way that we achieve that is we allow our members to trade on limits after they pull some collateral. And we're able to do that through centralized risk management of the clearinghouse, which again allows us to run a once per day net settlement so that folks don't have to settle with all their counterparties, keep track of who owes who what, but it's all centralized through the clearinghouse. And then thirdly, thanks to the point 1 and point 2, we can offer an all-to-all market. So a centralized limit order book where all of our market makers can post their quotes, and we get to aggregate liquidity across the world's best market makers to provide deep liquid markets and very efficient price discovery. I think that becomes hyper important to the asset class because by centralizing liquidity, we don't have the fragmentation that exists with single dealer platforms that crypto has. And so we're better able to absorb times of high volatility and not have liquidity dry up.
Great. Thank you for that overview, Tony. I think it's a great explanation of how you guys prioritize trust, liquidity, efficiency, and all that you do, and really make that a key part of your offering when it comes to bringing institutions to the market and giving them sort of a familiar experience that's going to meet all their needs. I'm curious how technology plays into that story. Can you tell me a little bit about what you've built from that standpoint and how that enables the value that you're able to provide?
Yeah, 100%. So I would say there's 3 main components that we think about as we're building our technology. So number 1 is performance. For example, our match engine is built as a traditional match engine would be, where we can support hundreds of millions of messages per day. We can respond in microseconds. And that's super important for our market makers because it allows them to post the tightest quotes possible, larger size, and know that they're going to be able to get the right executions versus a match engine that is in the cloud and frankly has latencies in the tens of milliseconds. So that's number 1. Number 2 is resiliency. So it is really important for our systems to be up 24/7, 365. And so we built in fault tolerance, disaster recovery, and audit trails that support that level of resiliency. And number three, of course, all this has to be usable by our members, and we're not trying to make it very difficult to connect. So that means that we use standard messaging protocols like fixed protocol, binary protocols, and things that our members are really used to from a workflow perspective.
Great. And so as you continue to pursue that value for your members, what are the main goals that you're targeting in 2025? What are you doing to make sure that you are increasing the value that you're delivering and bringing it to more and more people?
Yeah. Well, 2025, like I alluded to earlier, it's all about growth, right? So we've built the EDX, the machine exists, and so now it's a matter of getting the flywheel spinning more quickly. So the way we're going to achieve that is for existing members, we want to make sure that we continue to deliver on additional capital efficiencies through updated risk models, updated forms of collateral, and more tradable pairs that we can offer. And then in terms of traditional finance, we're now, I think they're all getting FOMO now, and so they're all ready to join in. We're ready to onboard them, and so everything's ready to rock and roll from that perspective. So those are going to be two of our main areas of growth.
Awesome. You mentioned at the beginning of our conversation that we're now seeing some tailwinds around the digital asset space, and so obviously regulation, particularly in the US, is something that has received a lot of focus lately, particularly with the new administration in Washington, D.C., a new Congress, lots that could potentially change things for digital assets and seemingly in a positive way as far as institutions getting off the sideline, getting into the market. Can you tell us a little bit from a regulatory standpoint what you're seeing and what you're keeping an eye on this year?
Yeah, so I think a lot of the changes that are coming are going to be quite positive. Number one, I think we're going to see less enforcement actions and regulation through enforcement. Number two, I think we're going to start seeing some guidelines and rules of the road. People want to follow the rules, but please tell us, what they are, and we can abide by them. So I think that's going to be very useful. And then lastly, and this may take a bit longer, right? We're very excited if there was some sort of national level regulation so that we don't have to deal with regulation on a state by state basis, which I think can be quite onerous and frankly not designed for crypto.
Yeah, makes a lot of sense. And so I'm curious, do you think that some of the anticipation around these regulatory changes, do you think that is leading to product innovation? Do you think it will lead to a new wave of product innovation? How do you sort of see things occurring on the product side?
Yeah, so I think about this a lot, and it's almost counterintuitive where crypto has moved so quickly, and that's a good thing. But now the real innovation is going to be as these new traditional entrants come in and things are going to go more mainstream. It's how do we plug in crypto to existing workflows or existing technologies that others have already been using. So for example, in the past, if you wanted to deal with crypto, you had to do self-custody, you had to manage keys, which is quite burdensome. Now, there are qualified custodians, and there's like Anchorage, for example, right? A bank that can do that for you. You don't have to worry about it. Before, if you wanted to source liquidity for trading activity, you had to build a smart order router. You had to talk to different market makers, and you had to do all that work for yourself, right? Now, places like EDX exist where we aggregate the liquidity for you, and you just have to connect and settle with us. So I think a lot of these building blocks have now matured, where people can really just plug into the existing infrastructure and just worry about growing their business and focusing on their core customers rather than trying to recreate all of this infrastructure every time a new entrant wants to do something in crypto.
I think that's very well said. I think that, crypto has been, mainstream by some definition for the better part of a decade at this point. And there's obviously been a lot of excitement, a lot of examples of crypto innovation that have made headlines, but I think that you've identified a really important lane of innovation that doesn't get talked about as much, which is providing the infrastructure, providing the institutional sort of foundation that's going to allow firms to take full advantage of a lot of the innovation that is occurring out there. So I appreciate you bringing that up, and certainly we'll be keeping an eye on EDX Markets and your work to sort of be part of that story. So
Yeah.
appreciate the time and insights that you've shared with us today. If you'd like to learn, for all of our viewers, if you'd like to learn more about what Tony and his team have built at EDX, you could head over to edxmarkets.com. And for more episodes about the Forefront like this one, head over to forefrontcoms.com and go over to the news and insights section for a full episode archive. Tony, really appreciate your time and insights today. Hope to see you again.
Great. Thanks so much. See ya. Bye.